I talked about portfolios that are in the market. Similarly, Blume has also been trying to market portfolios, and we're on the verge of hopefully closing something in this quarter. We have 2 portfolio discussions. When they're done, we'll be in a position to announce the 2 different sets of buyers, about 3 to 5 assets each. So that's kind of how we think about portfolios of secondaries. Now, coming to specific companies, the big story over the last year and a half, including a recent round that was announced, was Lenskart, right? So there was a $500 million round, which is predominantly secondary. I'm not on the cap table, so I don't know what the exactitudes of it are. And therefore, that was at a $5 billion valuation. Then there was a rumor that there was more secondary at a $6 billion valuation. And now the latest rumor is that they will list very soon, in the next 12 to 18 months, at a $10 billion valuation. So obviously, this was what was upsold as an opportunity for somebody who was buying them. And why did people sell? They sold because they have to show liquidity of type 1 or type 2, and they made enough returns. If they knew that was a guaranteed underwritten outcome that in 3 years it will double, nobody will sell. But God forbid it went public at 7 billion and you didn't sell at 5 billion and 3 years passed. You got 1.4x for 3 years of work. That's not a great return. So at 5 billion, it's too juicy to pass up. You take your returns and you pass it on to large institutional investors or public investors who are very happy with 15% annualized return. You're a 25% annualized return guy. Even in an opportunity fund or a continuity vehicle, you expect it to generate close to 20% return. Whereas a public market investor or a large hedge fund or a large institution or a sovereign would be very happy with 15% return. So when the price reaches that point, stocks change hands. And that's what we saw in Lenskart. And then looking at Lenskart is where my thesis began about this is what's going to happen more and more. So right now there's rumors that Grow is going through this. I saw a newspaper article that Grow is going through potential secondary. Zepto, right, reached 5 billion, needs more Indian ownership just to be abreast of, regulatory uncertainty. So raised 350 million from Indian investors at a 5 billion valuation. Still growing well. There's lots of it going public, even though it's not profitable yet, showing profitability at a unit level. It's giving confidence clearly. And the rumor is that the more Indian buyers waiting to buy, and the overseas guys are selling right now at probably a premium to that 5 billion, hoping that this will also, much like Lenskart. So that's what we're seeing in the mega close to path to decacorn companies. Action is the hottest, right? Much before all of this started, if you reference our original note, I talked about Dream11 being the biggest of these. I think they did $1 billion of secondary over a 3-year, 4-year period. A lot of people sold that between 2 and 7 billion of valuation, from what I recall. So there have been these mega stories. Then there is a new set of these recycling or the secondary sales happening in the next layer, closer to $1 billion mark. We have a very own Purplle. $180 million of transaction value was announced. I can tell you over 100 million of that was secondary. So more secondary than primary. When more secondary is happening than primary, you know that this company is getting to profitability or public. So it's being traded like a public stock, not like private stock, right? It's just a path to that eventual outcome. By the way, Blume also sold 10 million in that, little over 10 million in that 120 million. So we were also conscious of the fact that we need to return capital. We've started contemplating secondaries at the right time, the right companies. Similar to Purplle in terms of valuation and scale was recently Darwinbox, just like March of this year. Lenskart, everybody knows, a lot of people are users. Purplle, similarly, one of the biggest beauty product companies in the country. Darwinbox is a HR SaaS company which is expanded from India to lots of Asia. Clearly doing well because same argument, $140 million has come at $1 billion valuation. And again, a lot of it from what we hear is second. So it became a unicorn a few years ago. So clearly, they're growing into that or maintaining that valuation. And now there's interest for, again, those older investors to sell to some of the new investors and take some liquidity off the table. So that was Darwinbox. Literally fresh, hot off the press, and 24 hours in is our one of our unicorns, Spinny, which is raising a fresh round, 3-digit million. And I think about 25% of that round is likely to be 20 or 25% is likely to also be secondary. And if that goes through, then Blume would also be party to that secondary, take some liquidity off the table. Purplle was a Fund 1 company which had rolled over, so we've been holding it for very long, so happy to take some liquidity. Similarly, Spinny is a Fund 2 company. The fund is 9 years in, so we need to take some liquidity off the table.